Hey, so what's up gang, welcome back to our YouTube channel. Of course, it's your boy Vidola back in today's video. So today's video is actually so important. So most of the times I'm basically scalping and I've literally found a lot of success in it. So in today's video I'm going to be breaking down two of the major key levels where you can actually get sniper entries for your scalping. So these are some of the results that I've actually tried out using the entry levels, and it has actually worked out. So if you guys like the video, of course, guess what? Smash that like button, okay? Thumbs up this video for YouTube algorithm, and of course, please make sure you hit the subscribe button because we are on our way to 10k subscribers, so you guys know what it means. So we are going to slide into the video without any further ado. The first level, guys, is the previous day's high and lows. So that means yesterday's highs and then yesterday's lows. So that might sound confusing, but now let me show you. So we are going to go to our charts and then I'm going to show you something real quick here. And now I'm going to show you what this basically means. So I said yesterday's highs and lows. That's the first major key level that you are going to be basically looking at. So what does that mean? So let me show you something real quick here. So this was yesterday, starting from here up to this level here. This was yesterday, then this was the previous day before yesterday, and then this is today, right? So first things first, I'm going to just get these levels marked out and then I'm going to show you. So I can see this was the low of the previous day, and then this was a low of the previous day. Now let me show you. So it means I would draw a horizontal line to mark out the previous day's low, right? So I've marked out this level. So that means getting this level out, it means it's a key level. These are levels that are actually watched out by even big banks, like the big movers of the market. So it's also important that we also look at these levels. You guys understand what I'm saying? So now look at this. So this was respected the previous day, and guess what? It was again respected at this point here. It kind of worked as a support. The market reached here and then bounced off, was supported to go back up, and then reached the same point, was supported to go back up. So you can see that this being a previous high of the previous day, like look for the lowest high, you know, the lowest low of the previous day, and then this one here, you can actually call them swing lows, okay? Swing lows. Now so it being respected here, I would have some confidence. I'm like, okay, the next time it reaches this point here, I could possibly get a trade to the upside. So it's the same thing that we would basically be looking at here. So let's mark out the previous day's high and then show you something real quick here. So again, this was yesterday from here up to here. Now let me show you. So this was the previous day high, this one here. So I'm going to mark out that level. Let me mark that point out. Good. Let me adjust the line, of course, to match that point. Awesome. So I have the point already. So you guys can see that I have marked out the previous yesterday's high. This is the high here. So guess what? It's being respected again. It's being respected again. So I would be basically looking for kind of a sale, like a sell trade to the downside. Why? Because this level was respected yesterday, and we can basically see that this level is being respected today. So why are these levels really so important? So these levels are basically important because that means even big banks are looking at the same levels. They are also looking at those levels to take trades. You guys understand what I'm saying? So let's check out some other currency pair. Let's try out some other currency pair and see if this really works for every pair. So this is USD/JPY. So let me show you USD/JPY. Boom. Awesome. So we're there. Now I'm again going to try mark out the previous day, yesterday's high. So yesterday's high is at this point. Oh, sorry. Let me get the line on. Boom. We are there. So this was yesterday's high. So that doesn't mean that I will immediately get a trade. Nope. That doesn't mean that I will get a trade immediately. No. I'm going to basically wait for the market to come back to my level and then I'll possibly get a trade. You guys can see that this works. So let's try comparing this date and then this day here. So let me kind of adjust the line to capture the previous day's high before this date. So you can see this being respected, the same thing again happened. You can see that the market reached there and then bounced down, the market reached there, bounced down. So we have two cases. So the markets can either bounce off that level, or at any point fine, they can break above the point, but then they'll break and then counter retest, and you'll get a trade at that point. So what I'm basically trying to say to you guys is these are very, very important key points on taking trades. So these points are basically watched out by the big players of the market. So that means that there's going to be too much volume in the markets at such points. So to you as a scalper, guess what happens? You're going to enter position and you'll basically get into profits quickly without any further discussions. You guys understand the point? So I've shown you. So the first thing is you are going to basically mark out the previous day's highs and then the lows. So after getting those points, now wait for the market to come back to that point and you will be basically getting those trades in. So that's the first thing. Now let's slide into the second point, our second key level, and the last one. This is also important. So what's the next level on getting those scalping super scalping trades? So here's the point. So you are going to establish the overall trend. Okay, so whenever you're scalping, of course you have to go with that general trend. Don't try to go against the trend. Nope. Don't try to go against the trend in any point. Nope. So you're going to first identify the general market trend, and then after identifying the general market trend, the next point now is we are going to look for pullbacks. I think I've actually explained this multiple times in some of the videos on this channel. So you can actually check out some of our videos, of course, to see how you can basically identify these pullbacks. Now let me show you something real quick. So we said you are going to be basically getting trades on those points where pullbacks are basically happening. So whenever you trust a pullback, it's game time. So let me show you something real quick here. So I'm going to go to the charts again, and then I'll show you how you can basically get those pullbacks. So let's try again on GBPJPY first. So basically this is what's happening. So looking at this, this is on M15. Let me go to the H1 at least so I can get the overall general market trend. Boom, it's a downtrend. It's a downtrend. Now how am I going to get these trades? So how do pullbacks of course happen? I've told you guys multiple times. Of course the market is going to move down, and then it's going to kind of pull back up, and then it's going to move down, and then of course it's going to pull back up, boom, and then it's going to move down. So that's when it's a downtrend. Now the uptrend of course is just the reverse, the opposite. So in an uptrend of course we would expect the market to push up and then to come back down for a pullback, to push to the upside, sorry, then to come back down, and then to push to the upside. Concept, right? You guys have gotten the concept. So what does that mean? So we are basically getting trades at these points here. So let's say it's a sell, it's a downtrend. We'll be basically looking for trades at these points here, these points here, right? You guys get the point. So it means I'll get a trade at this point. First things first, I'm going to have a very, very great risk to reward ratio. I'm going to basically place my stop loss just above the pullback. Oh, this is really nice. You guys need to know this. So I'm going to basically put my stop loss above the pullback, and then I'm going to stretch my take profit at least to cover up 1 to 2 to make a 1 to 2 risk to reward ratio. You guys get the point. So basically that's what we are looking at. Now let's look in the charts and see what this how this can basically be done. So this is GBPJPY of course on the H1, and of course I can see it's a downtrend. As you guys can see, it's boom, coming down, pulling back up, coming down, pulling back up, coming down, pulling back up. So this also seems to be kind of a pullback. So I'll be of course looking for a sell today. So this kind of look, this is actually a pullback. Then I can actually get a pattern here. Boom. So I'll be basically obviously looking for a sell to the downside to break these levels here. So this is how I'm basically looking at these pairs and getting trades on the pullbacks. This is really so important, and you guys need to understand the concept behind these pullbacks. So a quick recap, of course, we said first things first, you are going to look for trades at those the previous day's highs and lows. These levels are really so respected. If you find a high, trust me, the market will possibly bounce off that point, because most of the big market movers are also looking at those points to get trades. So it's your chance, of course, to also trade with a big bounce, right? The second thing that we are basically looking at is the pullbacks. Whenever the market is moving, of course, we are looking at those pullback levels. So whenever it's in a pullback, get a trade when the pullback is done. Place your stop loss just above the pullback and ride the trade to the downside. So that's what I had for you guys. Of course, if you guys watched up to this at the end, please consider hitting the subscribe button, because it basically helps a lot. And see you guys in another video.